If I'm in charge at the treasury, the only thing I can think of is that you have to start backing all of your sovereign debt issuance with a sliver of Bitcoin.
Who wants to buy a 20-year, 30-year treasury right now at 3.5%? Nobody.
If you think you are going to have stability in the issuance of that stuff, I think you don't understand where this is all going. Bridging a dying system to a new system. That's the goal.
In my world, in institutional investing, there's still a great amount of misunderstanding. I hear it all the time. Well, somebody else can make another Bitcoin. Once you have that understanding and you get an Apple, Microsoft, or an Amazon who says, I'm going to put this in my treasury because I get it now. Or you get a very large pension fund, CalPERS, Texas Teachers, that says, I'm going to put this in my endowment or my pension as a separate allocation. That's a watershed moment. It will finally move from the risk to own category to the risk to not own category, which makes it uncorrelated to anything else, even gold.
ARCHIE.
If I'm in charge at the treasury, I'm at the president in the US, the only thing I can think of is that you have to start backing all of your sovereign debt issuance with a sliver of Bitcoin in there to make it a viable thing.
To your point,
the market actually wants to own.
I agree. But to your point and to your question, who's the biggest buyer of U.S. Treasuries? They're pension funds. They're endowments.
Yeah.
Mostly pension funds. Well, pension funds.
U.S. pension funds, global.
Talk about suckers at the table.
Mostly U.S. pension funds.
Yeah.
And those guys have a mandate to own a certain amount of treasuries because
they're safe.
They're safe. And they look at their chart of their obligations, their future obligations, and they know that they have to have a stable return in their portfolio to help get to that obligation in the future.
In nominal terms.
But here's the problem, in nominal terms. The issue is that those benefits will adjust according to the CPI. So if we run into a period where this is where the bond traders, this is where the bond vigilantes come in, which is if we run into a period where we have super high inflation, that blows up that trade. So who wants to buy a 20-year, 30-year treasury right now at 3.5%? Nobody. Why? Because there's a very high risk that we're going to have excessive inflation in the future and that those will be negatively yielding, meaning that your yield on that treasury will be lower than the inflation. Now, the reality is inflation is not the CPI number. The inflation is really more closely tied to the expansion of the money supply, which is somewhere between 6.9 to 7.1% since 1971, according to which measures you look at, but around 7%. That's not the CPI of 2% that we keep quoting. It's not even close. So, and they understand all this. So it is a problem that I do believe, and I agree with you that Bitcoin bonds could be a great solution. And Andrew Hone is the one who came up, well, he's been the one who's been lobbying for this or floating this idea recently. And it's a great idea, but its time we're not ready yet because we're just not there yet.
That's the thing about when you mentioned about designing something with an engineer's mind
to solve it.
Yeah, it's like, okay, well, when you're an engineer, you design based on physics, validated by physics, right? But when you're designing, when you use first principles and then you have to validate it by markets, which are essentially just human behavior, very unpredictable, like you would have expected, or a lot of people expected, yields to come down with what Trump is doing, but they've gone up.
I mean, Luke Roman sure didn't think so. He came out 2 days before the rates started going up and saying, just wait till everybody sees the rates go up. And that's exactly what happened. So there are people that are seeing the math. They're seeing the lack of cards that the U.S. has to play when we're importing all the physical things. Like you have to think from first principles.
So what's okay? Great. If that's the goal, right? That's the end point. Bonds with Bitcoin attached or Bitcoin exposure attached to it, right? How do we get the market, or what needs to happen within the market before that can become a reality? Because at the moment, I just think the market is so far removed, so far away from being receptive to that.
I want to just say the goal or the end state is stability in the markets and bridging a dying system to a new system. That's the goal, right? And doing that in a way where the least amount of people get hurt. And so when I'm saying, what can I do to engineer that solution? I personally think that the best way you do that is you have to start backing the sovereign issuance with something. So you can do that with Bitcoin. You could do it with gold. You can do it with, something that the market is going to look at that and say, well, is there some hedge built into this that protects the buying power and my savings by buying this thing in a free and open market kind of way and not being manipulated by the Fed just stepping in and buying it like QE, right? So how can you construct that so that the market actually wants to buy it? One of the things that I find so interesting about Bitcoin is you can do time-locked multi-sig on the issuance. So that if it matures in 10 years and I'm the buyer of that, I know I'm actually going to receive what I purchased and not get rug pulled by the US or you name it country. I mean, where this is really powerful is the municipality who can't print their own local currency and offset their stupid decisions. That's where this is really important, let alone at like a federal level that controls their printing press. So they better really be paying attention if they want to be able to navigate this. But why I like Bitcoin is because the buyer of it, if they actually understand how it works, knows that at the termination and the duration of this, that because they hold one of the keys and it can be time locked, they'll actually receive the thing on the other end of it.
How do we get them to want to receive that?
Knowledge.
And that's
Shows like
that's the
this
point. That's the point that I'm making.
Yeah.
I just think at the moment, we're not quite at the point where the market recognizes the value enough to be able.
That's equivalent to it. So this is important too. I can construct a bridge that solves my ability to get to the other side of the river. If everybody standing around me cannot wrap their head around what a bridge is, does that mean that making a bridge is not a good solution?
I don't think that analogy holds with Bitcoin attached to a bond, because with confidence, you have to perceive the benefit. With a bridge, you can actually just walk across the bridge and demonstrate it. Whereas we don't really have, the United States government doesn't have the time to wait long enough for Bitcoin to demonstrate its benefits to the level of investor who is at the moment rather skeptical.
So Archie, when you look at financial markets, everything's a projection of the future and nobody knows what the future is going to be. But what we can do is we can look back and we can say, what has been the performance of Bitcoin against the S&P 500 over the last 4 years, 5 years? Anything that's like a decent time, not the last 6 months or the last 30 days, but like the last 3, 4, 5, 6, 7 years. And when I look at Bitcoin's performance to anything else, it's outperformed it, period.
It's been the number one performer in 9 out of the last 12 years.
So I don't think that's up for debate.
So when we're talking
we're all in agreement on that one.
So when we're talking about engineering a solution that involves financial projection, right? I don't know what to tell people. Like, I can lay it all out. I can show how there's a network effect that's happening. We can look at hash rate. We can look at, the U.S. standing up a strategic reserve. We can see here other countries are doing the same. Like all of these things. I can't predict the future. I can't tell you what the price of Bitcoin will be, but I can look at something that is engineered very soundly, which is, the source code, and I can say. And if a person was really concerned, if you're a government and you're really concerned about it, okay, well then maybe incorporate some gold and hope that the buyer trusts you to deliver it. But there needs to be some type of backing to anybody in government, whether you're at the local municipality or you're at a federal level, you name it, country, anywhere in the world. If you think you are going to have stability in the issuance of that stuff, that you're going to have a real buyer for it and you're not backing it with something that's going to protect the buying power, I think you just don't understand where this is all going, period.
So when I look at Bitcoin, I think, 2021 was probably the coming of age of Bitcoin, and the ETF approvals 15 months ago was probably the debutante ball for institutional investors to come on board. And by the time we get to the point where institutional investors all have an allocation exposure to Bitcoin, maybe some years away, whereas the situation with respect to the United States government refinancing its debt is rather
imminent,
an acute urgency, right? It's almost at emergency levels. I mean, they're acting so irrationally. I wouldn't even say that.
I think it's fair.
so unpredictably, right?
Yeah, there you go.
They're taking extreme measures in order to be able to engineer circumstances in the financial markets that will enable a refinancing of their debt,
Yeah.
which is not turning out the way they predicted.
Yeah.
So I think it's years away, maybe 2-3 years before we see that happening. Bitcoin
Yeah.
backed bonds issued by a sovereign, right?
It comes down to the competence of the people in charge of you name it, country and treasury.
Yeah.
That's all it is. Like,
and it goes back to what you said before, which is just understanding, widespread understanding. Like in my world, in institutional investing, there's still a great amount of misunderstanding in the whole cryptocurrency space. They don't see how Bitcoin is different. They don't see how, I hear it all the time. Well, somebody else could make another Bitcoin. Yeah, it's the oldest one, but who cares? They don't really understand all the properties that we won't go into because your listeners already know. But it's the understanding. And once you have that understanding and you get a big company that really understands it, a big one, you get an Apple or a Microsoft or an Amazon who says, I'm going to put this in my treasury because I get it now. Then you have that's a watershed moment. And so then you have a herd. And you've seen that video that,
the guy dancing on the hill.
Well, yeah, that's a good one.
I love that.
And then the other one is of the sheep that are just like, they're being nudged out of this gate, and like one wanders out, second one wandered, like a minute later, 2 or 3 wandered out. And then every sheep turns around and sees the 4 or 5 that are wandering out together, and they're like, oh my God. And then it's just an absolute herd. But that's the same mentality of investors. And it doesn't matter if you're retail or institutional. It's the same mentality. And they're going to finally say, this has finally moved. And we've been talking about this happening over time. It will finally move from the risk to own category and correlated with NASDAQ and general, S&P 500, and the risk to not own category, which makes it uncorrelated to anything else, even gold. And now it's something that you have to have in your portfolio and you have to have an allocation to. And once you get that, you get a couple of investors that understand that, some key companies or investors, or you get a very large pension fund, like a large one, CalPERS, Texas Teachers, that says, I'm going to put this in my endowment or my pension as a separate allocation. And this is the key to it, to the bond issuance and having Bitcoin bonds. This is the key, is that allocation comes out of their bond portfolio. And once that happens, then Bitcoin bonds all day, every day.